with us, we've got one of the gentlemen I pay a lot of attention to, who I think has focused so marvelously and almost laser-like in detailing for the people week after week, multiple articles a week that I link to on my website, stevequayle.com, but Steve Rocco. And listen, he started to invest in precious metals in 2002. And in 2008, Steve began writing articles detailing the changes in the gold and silver market. Now, I'm one of the guys that publishes a lot of his stuff because I pay attention to it. There are a lot of people, Doug, Joe, that basically are out there, and there's a lot of experts on different things. There's some amazing experts, for instance, David Morgan on gold and the silver, primarily the silver sector of mining companies and all that stuff. But I don't think anybody does what I would call the availability of silver in all aspects, the true numbers better than Steve Rocco. And what's fascinating to me is that independent of me, and obviously independent of me, he has his contacts. And when we were talking last night on the phone, it's just astonishing that when everybody's saying the same thing and there's no agenda to say it, it begins to paint a very interesting picture. You know, it's stated that when goods don't cross borders, armies do. When paper took the place of specie, in other words, we had a legal tender backed by gold and silver, when basically the product turned into a promise, it was downhill from there. So with no further fanfare, I want to bring on Steve. And Steve, first of all, thanks for the amazing job you do, and I absolutely love the stuff you put out because I call it reality-based numbers. It is what it is. No one can jerk them around. No one can fake them. No one can twist them. So just share, you know, at this point, the things that are on your heart concerning the silver market. You go wherever you want and take it away.
All right, Steve, thanks a lot. And Doug and Joe, I appreciate it. There's been a lot of interesting things happening in the market, especially since June. And there you could see it in the data coming out of silver demand as well as gold demand. It all changed in June, and that's when we had that possible Greek exit of the European Union. And then a month or so later, we start seeing the big crash in the Chinese stock market, especially, let's say, investment demand. We see surges in gold buying when there's a fear and panic that there's something going to happen in the financial market. So even though there is some increase in demand when gold prices fall, most demand comes when there's fear in the market. Now, silver is a whole different ballgame. And since 2008, when the U.S. financial system actually died, and the investment banking system died, took Lehman Brothers, Bear Stearns, it took all these huge investment banks. And, you know, Lehman Brothers was around since the Civil War. So when these banks went under, we saw a huge increase in silver and gold buying, but especially silver buying. And even though gold buying, let's say gold in North America for gold eagles, Canadian maples, even though they were strong in the beginning of 2008, 9, and 10, they have fallen off. Amazing. Silver continues to get stronger. And so I think we're seeing what's happening now, guys, and this is from talking to different people, dealers. There's this notion that the wealthy are going to buy large silver bars, like the 1,000 ounce. Those are the wholesale bars. Those are the bar that is sent to manufacturing plants, and then they make products out of it. Well, it seems as if that's not really the case. What's happening is the wealthy, and they're buying a lot of silver. When they call up a dealer, they're dropping sometimes 6 and 7 figures. And they're not buying the large bars. They're buying the official coins and the smaller bars. So that's why we're seeing there's a shortage, and it started in June, picked up in July, and it continues, which the premiums are very high on some of these coins. And it takes 6 weeks to 2 months to get delivery now. And so there's this huge backup. And again, a lot of the buying by the wealthy are more for silver than gold, which is very interesting. And they're also buying smaller products. So that's what's happened. We're still seeing shortages of product that started in June, July. And let me just give you one interesting data point. even though there was a shortage back in 2008 when the price of everything got hit in 2008, and I guess you all remember there was the price of oil, the price of silver in the stock market, everything fell from like July down to October, just fell off a cliff. And so investors started buying a lot of silver because they thought this was going to be a bottom. Now, from June to September of 2008, investors purchased 6.1 million ounces of silver eagle, which was a lot at the time. Well, we have a shortage this year, but the difference is, September this year, they purchased 18.8 million ounces, 3 times the amount, more than 3 times the amount, and we're still having shortages. And that's just one coin. So I think a lot of people who don't pay attention to the precious metal market, they don't realize that there's a huge surge in silver investment demand, and I think we're going to see continued shortages going forward. What do you think, Steve?
Answer, Steve, to the question is will we see more product in the pipeline? I don't think you and I will have to touch on this. We will have to touch on this, but I don't think people realize that it's not just what the average dealer has on his shelves, or even what the distributors, whether it's 6 or 11 of the main distributors in the whole country that are the, if you will, the nexus point for everyone to buy their metals from. And we talked about this, Doug and Joe, Steve and I did. In all the years I've been in business, none of my heavy investors have ever wanted 1,000-ounce bars. As a matter of fact, they sell at a discount to spot. In the last year, I would say I have actually sold I'd say this, 50,000 silver rounds to every 100-ounce bar. So that's just to try and share how few people even want 100-ounce bars. Now, 10-ounce bars and 1-ounce rounds, a round, and let me just use some terms. A round is a 1-ounce silver medallion that has no legal tender status. By law, they have to have the purity on them, 999 fine, and they have to have the weight, 1 ounce pure silver. The fascinating thing is that it's my understanding that the biggest guys in the world, J.P. Morgan's a good example, is buying up the physical silver eagles, the Canadian maples, and just about everything that they can take delivery of from anybody who's willing to sell. Now, why would they do that? Well, the metals market has been so suppressed for so long. And now we came into a situation where I don't know that they figured it out. And I mean, these guys are smarter than everybody. But the point being is that the physical price of the metals has diverged from the spot price of the paper silver market, whether exchange traded funds, IOUs, or any form of liar's paper. So I think now, Steve, Doug and Joe, that people are getting to the point where they understand if they can't touch it, they don't own it. So, Steve Rocco talks to different people around the country and around the world. The people that are feeding back to me, Doug and Joe and Steve, in real time, and those are the investors, they don't want the bigger bars. Number one, they're too heavy. A 1,000-ounce silver bar is a pain in the back to literally try and move. I mean, that's a serious amount of weight. The nice thing is, too, is when you're dealing in a barter situation or needing to liquidate silver, you want to liquidate it in the smallest increment possible. And right now, I just did the numbers. The gold to silver ratio historically, according to the Visual Capitalist, is 15 to 1. In other words, 1 ounce of gold would buy 15 ounces of silver, or whatever the ultimate measurement was. At this point in history, it's 71 to 1. And in 1980, it went 17 to 1. So what that literally means, Doug, and you and I spoke about this, is the gold to silver ratio is indicating a severe, what would I call it, break from reality as far as its historic trading pattern. There are technical traders that are trading that, but let's make it clear, and I'm going to turn it right back over to you, Steve. Steve, that what we're seeing in demand is something we've not seen even in the golden years, pun intended, of 1979, 1980. What we're seeing is a unparalleled demand for metal. And everybody knows that Wall Street can spin whatever story they want to spin, but at the end of the day, if you can hold it in your hand and exchange it for goods, you've got something that will take the place of cash. If you're holding a stock portfolio, that's another difference. There's only how do I say this? There's only a two-way market as long as a market is able to facilitate the buying back and forth. The thing that I don't think you'll see in the future reality-based Mad Max on steroids world is some guy offering you 100 shares of Apple stock for a peanut butter and jelly sandwich. Your comments, Steve?
Yeah, I agree, and we could get a better understanding of what's happening now if we do go back and kind of look at, like you spoke about, what happened in the 70s. And everyone knows the 70s, the price of silver and gold skyrocketed. And silver hit 49 in 1980, and gold hit 850. But what was interesting, what led up to this, is when they demonetized silver. And the reason why the U.S. government demonetized silver was that the industry was using so much silver, and we were using so much in coins, in our coinage. And it wasn't just the U.S. France had silver coins, Canada had silver coins, Italy had silver coins, even Japan had silver coins, but we had the most silver coins. So they were saying, okay, we've got this industrial demand picking up significantly in the 50s and 60s after World War II, and then these countries were still using so much silver in their annual mintage, and so they demonetized silver, and then all this silver was absorbed, and it was actually sucked into the Americans, investors. They hoarded it because they knew the price was going to rise. So they hoarded all this silver, and then in the 70s, when the price actually rose from, I think it was $1.50 in 1971, and these are annual prices now. And by 1978, the price of silver got to like $5.50. Well, a lot of investors who had purchased or hoarded these quarters, dimes, and half dollars, they actually sold them back into the market, and they were making 2, 3, 4 times their money. Well, the price of silver really skyrocketed in 79 and 80, and that was due to a lot of larger buyers coming in, the Hunts, of course, and other institutions. Well, this is when the public came back in. They came back in 79 and 80. Then when the price, and it fell significantly in 80 to 82, there was a lot of selling. Well, interestingly, there was international panic, and investors and Americans were starting to get worried about inflation again. So they started buying silver in 82 and 83, and it pushed the price up. Believe it or not, silver had fallen to $5 in June of 82, and then it went up 3 times, $15 in 83. So it was only for a year and a half period that we saw this public coming in and buying silver. Now let's fast forward to what's happening currently. The difference now is, and I mentioned it when I first started talking, when the financial system and we had that market collapse, the housing market fell apart in 2008, people really woke up, and a lot of people started buying silver and gold that didn't buy it before. But if we look at the numbers from 2008 to 2011, guys, foreign coin demand was about 630 million ounces over that 4-year period. Now, this is the interesting part. Since the price of silver peaked in 2011 and has fallen now to 14, right now it's $16, there's been actually more buying. If I go by what we're going to see this year, it'll be 820 million ounces. So this has been not only an 8-year buying spree of the public, they're buying more silver now, even as the price falls, which is much different than what they were doing in 79 and 80 and 82 and 83. They were only buying on the way up. And so I spoke with Steve about it. That was only about 3%. He thinks about 3 or 4% of the Americans were buying silver. Well, the people who are buying silver now, it's less than 1%. I'll tell you one more data point, which is fascinating. since 2007 to 2014, we have four segments of the silver market. We have silver bar and coin, we have silver jewelry, we have silverware, and then we have industrial. And industrial still is the largest consumer of silver in the world. Some of it is recycled, but a lot of it ends up in homes, electronics, infrastructure, or landfills, and it'll never be seen again. That's one difference about silver. A lot of it's destroyed, or it's gone forever. But since 2007, the silver jewelry demand has increased 17%. Silverware is up 1%, and industrial is down 10%. But get this, silver bar and coin is almost up 300%. So there's a lot of numbers there, but it just goes to show you that something has changed.
Mr. Rocco, if I can interrupt you, I just have this question. So 1% is actually, so what you're saying is only 1% of the population is buying silver. However, that 1% of the population is buying more, or to the extent of 320 some odd percent you mentioned, right?
Correct. And we do have, from talking to dealers, there are new silver buyers. There are probably double the amount, but it's still less than 1%. We could go from 1 million to 2 million buyers, and if you've got 300 million plus people in the U.S., it's still less than 1%. So we could have a doubling of silver buyers, and I would also say probably half, Doug and Joe, of buying of silver is probably done by the wealthy, large volume buying. And I think Steve can corroborate. Even though we're seeing a lot more buying by individuals, a lot of the volume is coming from wealthy clients. And from what I hear, they're choosing silver over gold, which, silver you can store a lot. I mean, gold you can store a lot easier. But I did put this chart out. In 2014, Doug and Joe, there was 196 million, let's say 200 million in silver bar and coin demand. And that is, let's say, 1%. If we go to 2%, that's 392 million. And if we get 4%, it's almost 800 million. Total mine supply is 877 million. So even if we just double and go 392, I think it'll totally seize up the silver market. That's the reason why silver is manipulated, gold is manipulated, because if people were to wake up to understand the money value, the store of value of silver and gold, just doubling of demand would totally seize up the market.
Interesting.
Well, I think that what Steve is talking about is the seizing up of the market. I believe we're in the preliminary stages of that. One of the things that's hard for people to understand is when you have demand that exceeds supply, typically markets would be exploding. I mean, silver, just to be in $1980, what silver should be $102 an ounce right now. But what I think is happening, Doug, is that the paper sellers have so, how should I say this, just as everybody looks at the Dow Jones Industrial Average and believes that's the total representation of the economy, they look at spot prices as being the total or the real or actual cost of acquisition. That's no longer the case. And again, thank you for pointing it out, but I've been talking about this on talk radio now for 25 years, that we would have a divergent market, the day when the official spot price would become irrelevant. And I see where they're at just ready getting in there. And so when Steve Rocco shows you that, the mint figures just for Silver Eagle coins, and the people need to understand this, there's only so much silver available at any given point to fill the pipeline. The cupboards are bare. There is no Goldilocks coming to basically from grandmother's house, or Little Red Riding Hood. I think I'm mixing my fairy tales, but hey, it doesn't matter. It's a fairy tale presentation from the biggest manipulators in the financial realm to get you to stay in a paper market, even in the paper gold, silver market. I remember when ETFs came out, exchange traded funds, myself and others were screaming at the top of their lungs, it's not the same thing. That would be like going to a hamburger joint And instead of ordering a burger, even if they had real hamburger, they just put a piece of paper with a picture of burger, and you're eating a hamburger, but it's not the real thing. You're eating a picture on a piece of paper. I hope that's a in-your-face metaphor. The point is that the market has seized up. The Royal Canadian Mint basically quit shipping silver maples and silver 10-ounce bars. They also did something that alienated a lot of the dealers. They raised the premium to the dealer. And just to explain how this works to people, the spot price you see has nothing to do any longer with the price you will pay. And the mints are not stupid, especially the U.S. Mint or the Royal Canadian Mint. It's fascinating, Steve, and I'll throw it right back to you. Isn't it amazing when we get a downturn that even though the demand goes up and people say, I want to buy more silver, there's just not that much silver to buy? Here's the question. Do you believe the mints, the primary mints, world mints, withhold the silver from the market when they see the market is artificially low? I guess that's the question that I get asked, so I'll ask it to you.
There's really no way I can answer that with an affirmative knowledge. And even people have asked me, are the dealers or wholesalers holding on to silver, especially if you can't get it for higher prices? Kind of like someone when a hurricane comes in and holding on to water going out. And again, we need to realize since 2008, the largest private mint in the United States has increased its production volume. Now they produce the rounds. Let's call them the blanks that go to the U.S. Mint for the production of the Silver Eagles. They were doing 25 million a year in 2008. They're going to do 75 to 80 million this year. So they're backed up, and you know this, Steve. They're backed up till December. They're not taking any new orders, and they're one of the largest private silver mints in the U.S. So they're not taking any new orders for their products, their private products, for 2-3 months, and because they have to continue producing the blanks for the U.S. Mint as well as other mints. But you did bring up an excellent point, and I want to make sure your listeners understand there is a disconnect between paper and real physical silver. People who don't know any better, they think that they can put $10,000 in a silver ETF and they own silver. Well, I looked at the numbers and something really changed in 2011. People did put money in the silver ETFs. From 2007 to 2010, that's a 4-year period, it was about 440 million ounces went into the ETFs all over the world. Well, it was about 470 went into physical coin and bar. So it's almost even. A little bit more went into physical. Well, something changed in 2011. And get this, from 2011 to 2014, the net build of world silver ETFs was 34 million ounces, compared to 790 million ounces that was physical bar and coin purchases. So it just goes to show you that investors instinctively are understanding that they don't trust paper, even if it's paper. They don't trust fiat money. They're not trusting now the government, and the U.S. Treasury market is becoming less and less stable. And so what we're seeing now, investors want physical metal, and they want to acquire physical metal. And I think we will see a huge problem going forward, because if you go to a bank, you can get a certificate, a silver certificate, and they will say, okay, you want to put $10,000, we'll take it, your money, and we'll have a silver certificate. Well, the customer, thinks the dollar's worth of silver. Well, it's on the bank fine print that silver certificate, the silver's not there. It's basically backed by the assets of the bank. So there's a lot of paper silver out there, whether it's ETF, pool accounts, certificates, that the silver is probably not there. So there's